Sun International has pumped up its growth momentum, one of the building blocks being SunBet achieving record income and profitability. As a result, the hospitality giant's full-year headline earnings per share surged 88%. Group CEO Anthony Leeming joins us now to discuss the numbers further. Thank you so much for your time, Anthony. How would you characterize this financial year for Sun International?
Look, I think, thanks for having me and even to your listeners. It's been a tough year. I think consumers under pressure, heightened interest rates, obviously increased load shedding. But overall, I think the group's done exceptionally well. So we've had our major part of the business being the casinos and LPMs have been very resilient and held up despite a very tough market. Then on the positive side, our SunBet online business has shown rapid growth, increasing customers, increasing deposits, and really revenue up more than 100%. And we've seen a fantastic growth on the bottom line, EBITDA 221 million. And then our other side of the business, hotels and resorts, exceptionally strong. The Table Bay has benefited from international tourism, and Sun City's also achieved record EBITDA, and really one of the best years ever, 455 million, and that's by far above what it was pre-COVID. And really still got room to go. So I think we're very optimistic about the future of Sun City.
All right. Well, we're going to zoom into the different divisions, starting off with hotels and resorts. You have mentioned that side does operate at a structurally lower margin than casinos. And I'm wondering, considering the constrained consumer environment, does that make it difficult to then increase that margin substantially on that side?
Yeah, well, I think, look, our business has got quite a few components to it in terms of the hotels and resorts. You've got the Table Bay, which is pretty price resilient when you consider the international traveller. And we've seen fantastic growth in room rates as well as occupancy. So we are achieving record years. When we come to Sun City, I think Sun City's got a bit of a product for everyone. So there's different entry points. We are seeing great growth rates in the Palace, and we've seen great growth throughout. Demand has picked up very nicely. And obviously higher demand allows you to price more. I think it's still an affordable destination for most people. There's somewhere to stay. There's the Vacation Club, our new Lafika Villas, which is traded very well. So we still believe it's an affordable local destination, both for leisure and for conferencing. So I think it's got great potential, and we're not feeling the sort of pressure the consumer's prepared to pay the price. Yes, I'm sure to some people it's expensive, but when you look at the offering, what's on scale and what's on offer there, it really is a worthwhile destination.
All right. Well, let us move on over to Piermont. You are, of course, acquiring Empress Palace owner Piermont. And I'm wondering if this signals a need or future of consolidation in the hospitality industry or some parts of it, or just maybe gaming.
Yeah, this is mainly gaming related. I think for us, it's a scale benefit. We get a little bigger. We don't see there's too much overlap from a competition perspective, so we're pretty sure the deal will be approved. But really scaling up, we understand the market's mature, but they've got the online database, which I think can leverage very well with our SunBet. There's certainly some synergies in terms of capex and procurement. And I think, we'll learn from them, they'll learn from us, and together it'll be a very, very good, compelling group with some great big operations and fantastic cash flows.
And actually, just sticking to Piermont, of course, with the acquisition, you would be taking on its debt pile as well. And I'm wondering how you would be navigating that debt load.
Yeah, look, when we look at our debts, we're going to gear up to probably about 2.6 times. I mean, understanding this is only going to happen towards the end of the year. We'll likely reduce our dividend cover. We pay 75% of adjusted earnings, and we'll probably reduce that to 50. So even with that, we see ourselves within 24 to 36 months, reducing to below 2 times debt to EBITDA, and then we'd up the dividend cover payout ratio again. So D years pretty quickly. It's a cash generative business, and we really see positive and big upside coming through.
And actually, I mean, how are you wrestling between casino gaming and online gaming? I know that you do have both, but does the environment and the consumer behavioral shifts maybe not dampen the prospects of physical casino gaming?
Yeah, look, we still see visitation on properties as very good. We feel more it's the casino, the consumer under pressure. And the online, while some of our gamers do gamble online, they do it both. We've seen better returns from those players, and we've certainly seen a much broader market in the online space and more people that are prepared to play online sport betting as well as casino games. And therefore, we don't see the one cannibalizing the other. In actual fact, around the world, it certainly hasn't been the case where land-based casinos have come under massive pressure just because of online. So in certain jurisdictions, it definitely hasn't happened. And so there's great opportunity for the online to keep growing, as well as casinos to remain resilient and keep their share of the market.
Yeah, and of course you mentioned there on online gaming, SunBet does continue to surprise to the upside. What does the continued astronomical growth of SunBet depend on?
Look, I think it's obviously growing, I think, the brand in the market. SunBet is well known to our customer base and our sort of side of the market, but there's a much bigger market out there. We're sitting at about 3.7% of the market. We think we really position ourselves well, where we've got a very profitable business, the ability to push more in marketing and to gain some market share. But it's a big market, and we're comfortable. We sort of, at the right place and got a lot of opportunity for growth. So looking after the customer, we've got our platform in better shape, our service offerings better, withdrawals are better. So you name it, we are working really hard to make the customer experience good. We have an exceptionally good VIP team that looks after the top players, and our marketing campaigns are starting to bear fruit. So long term, increased deposits, increased players, and really gaining market share with a bit of growth in the industry as well. We see by 2028, we're targeting 3 billion in gaming revenue and about 900 million EBITDA, which is a substantial uplift from where we are now.
Yeah, and of course, that opportunity for growth also does depend on your capital expenditure. And I'm wondering what your capital allocation priorities are, at least in the short to medium term.
Well, the medium term, clearly, Piermont's the big one. So we're not going to do a lot of big things out of there. We certainly are going to continue paying dividends, which is critical. And we set out that a few years ago. We said we're going to return value to shareholders. We've done that. We've done a few buybacks. And we'll look at a few more. While the market is not really reflecting the true value, we could continue with some smaller buybacks. And then the online game, it doesn't require a lot of capital. It's more of a marketing investment. And new markets, we might have to invest a bit in marketing. If they're really not working, we can pull out quite quickly. And in South Africa, we probably spend a bit more. But really, it's self-funding to a large extent. At Sun City, we do have the main hotel to refurb. Other than that, the product's in great shape. And we look like, coming forward, there's going to be a lot of cash flow. We completed Lafika this last year. Already sales are way ahead of forecast, and that only bodes well for the future of Sun City.
That was Sun International CEO Anthony Leeming.